Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 2nd of October. All right, as we come into Tuesday's trading, I think you'll find a lot more traders just getting a little bit more active after that reconnection to the market yesterday. A lot of talk about NAFTA, and I'll come into that in a minute, but looks like we've concluded NAFTA. The whole agreement has been signed, and that's going to take a lot of pressure off dollar CAD. And that's really good news because that brings dollar CAD into really more normal market trading conditions. At the moment, it's heading to the downside, so we've got a potentially good situation there. It's really good news, I think. Now, just have a look at the currencies where they are. Aussie just trading sideways to start the week. We've had the euro, another little move to the downside, and it's sort of moving 30 or 40 points and then starting to trade sideways again, whereas sterling is really all over the place, and that's on the back of Brexit and variable sort of local data. The manufacturing numbers out of the UK yesterday were weak. Kiwi trading sideways, but we just had some weaker sort of business outlook numbers come through. That sent the Kiwi down about 30 points. But once again, traders aren't really confident to really jump straight into it at the moment because we haven't really got that US dollar momentum going at the moment. It's trading a bit of sideways, and I'll show you that in a second on the index. Dollar yen, it is just cruising to the top side, but technically it's just going up, but there's no real levels to get in at this point, and that's one of the tricky things. Now, just have a look at when you do come in to reconnect to the market. It's always good to have a look at what data came out and did it move with the market. So look at these manufacturing numbers out of the UK. They're like a 1 point variance here, as in like 1.0, right? That's a really big variance. And that's sort of saw some sterling rally, but at the same time, we've got negative Brexit news out there. So it's really conflicting with sterling. But what we're finding is the market is just trading headlines. And that's a really sort of crap situation. But you're focusing on direction. Now, to me, sterling is trading sideways. We've got a hawkish sort of central bank. Technically, it's breaking down. And then we've got Brexit. So sterling is very tricky. Whereas you look at euro, it has a downward bias. So we've got stronger employment numbers here on the Eurozone. That goes against it. So you're like, well, it's wrestling with the market. It's not a good situation to be in. The ISM manufacturing numbers out of the US, okay, slightly weaker. Okay, the market has really, if anything, brushed that off a little bit. On the index, on some of the majors, it's just sort of gyrating. And then you've got those weaker Kiwi business numbers, which were out just over 2 hours ago. All right, so this coming back to the major currency pairs. So you're looking at the numbers. You're trying to work out, did they really impact the currencies? And the main reason for that is you want to see if those details are really impacting the currencies. And that will tell you whether the market is working off fundamentals or just trading off the news. Now, as I mentioned, just having a look here, it's always a good thing to come back and check what the US dollar index is doing itself. Now, of course, I say this all the time, euro is basically 58% of the basket. So if euro is going down, the dollar index is going up. You can see at this point, we had that move last week up through 94, sort of 50, 60. Now it's just trading sideways as we await the next major release. Now, a lot of the news that came out yesterday was more around NAFTA, if anything. The US dollar hasn't done anything. I think a lot of it was already factored in. China, I think they've got holidays all week, and we are just seeing sort of holiday trading conditions on dollar yuan. All right, equity markets, if anything, slightly up in the US. That should give a positive tone to the Asian equities. We'll see how that plays out. All right, now just coming back to when you come back and have a look at the overall technical perspective, all right, to come into the MyFX Trading Hub, you're really sort of gauging yourself first and foremost to what trading conditions are like at the moment. Now, geopolitics, this is going to start to change because we have, as I said, concluded NAFTA. Now becomes the USMCA, United States, Mexico, Canada agreement. That should be a positive step for traders globally, and they'll be very happy to jump back into the CAD and CAD crosses. But we still have Brexit simmering away. US-China trade situation is still hanging around as well. So that's where we are with that. But we are getting closer back towards normal market conditions. Now today, okay, what's the focus today? So we know the Aussie's trading sideways. We've got the RBA stepping up to the plate. Now, they have been extremely neutral. If anything, they've been slowly talking up the Aussie. The chance like the next move in rates will be up. If there's a change in that statement, then like the next move could be up or down, then I think that's going to be a negative for the Aussie, and we could see it move lower. But at this stage, with China on holidays this week, it diffuses the pressure on the Aussie somewhat, and there's no talk about US-China trade tariffs just at the moment. All right, so you're just going to work out where the balance is. So the Aussie could bounce around on the statement, no change in rates expected. And then once we come into trading offshore in the European market, you really look at the UK construction numbers. Now, we just had really strong manufacturing data, and you see sterling. If I just bring it back to the sterling chart here, you have a look at what sterling's doing. So we had some strong manufacturing numbers. You see the volatility around some of these releases, and a lot of this is around Brexit headlines. So pretty unreliable. Is sterling a good trading opportunity around the construction numbers? I don't know. I don't think so. With the Brexit and the Tories imploding, looks like there may be some new deal coming out, which should be positive for sterling. But the Tory party itself, the current ruling party in the UK, is imploding. So I'm not so sure those construction numbers will impact. It's worth keeping an eye on for sure, because you never know when these things are going to come into favour and out of favour. But that's where the major opportunity will be coming into today's trading. Now, daily analysis snapshot. There's not much to do here. This happens when you do have pretty quiet markets on Mondays in particular. Now, there's no change in sentiment across the board here. One thing is dollar CAD is bearish, and we do have the old NAFTA concerns out of the way. So this, to me, is still, and you can see just down the bottom here, I've got a technical trade pending. I'm looking to sell on a rally back towards 129 the figure. It may look a bit far out of reach at the moment, but believe me, all it takes is one little something to happen, whether it's on oil or a comment from Canada or the US, and we see it spike back up, you get short, and then it drifts back off again. So to me, that's still the best trading opportunity. The US dollar, bullish at the moment, dollar yen bullish, dollar Swiss bullish, and the top pairs pretty much all bearish. Unfortunately, sterling with Brexit as well, and that really high inflation rate it still has the Bank of Canada on a hiking sort of mode. So to me, sterling is a bit too hard to call whether it's going to go down or just trade sideways in a choppy market. This is, see how the, outside of dollar CAD, the major pairs, these pairs here should all be moving in the same direction, which pretty much they are. And these pairs should be moving in the opposite direction to the dollar, and they pretty much are. So we're getting back closer to normal market conditions. And that's a really good thing. That's where the cash really starts to roll in. All right, so that's it from me pretty much, guys. If I just come back and cover the major news pages at the moment, you are looking at, there's still concerns over Italy. They are looking to change their budget and increase their debt ratio or debt to GDP. It's basically like giving someone who's already bankrupt twice some more cash. Now, Italy's nowhere near as bad as what the Greeks are in debt, but still, it's another chance for another government. It's another political play to get out of, not really get out of Euro, but try and improve their own conditions. And you can't blame them, but it is being shut down by the EU. They don't want anything to do with it. Now, the other major news, as I mentioned, sterling, still battling away with Brexit. So you've got the UK Tory government imploding, the Irish border issue, it's up and down every other day. Canada, NAFTA's out of the way. Stronger oil prices should put further downward pressure on dollar CAD. Oil's at $75. It's going through the roof. So whatever OPEC are doing, it is working, making more money for those guys. And that's pretty much it. So still geopolitical issues. China is on a vacation this week on holidays. So I don't know if we're going to see Trump throw any barbs at the Chinese while they are on holiday. So we'll see how that plays out. But when you come back to the major pairs, if I just swing back just to finish up, you're looking for your major levels. And if you have a look at the trading activity, sorry, just to get my pen back up. You have a look at the trading activity here. You can see the Aussies just flirting with the downside. Now, I'm still very surprised that weak Chinese manufacturing numbers on the weekend did not have much of an impact. I think they will come back and hit the Aussie at some stage. As I said, the Kiwi, slightly weaker business numbers. It has drifted lower, so that's sort of, you're trading on a bearish bias there. Dollar yen, well, it's still cruising to the top side, but sort of sideways for the moment. Euro still tracking to the downside. We've got that new sort of resistance level up towards 116. Brexit, construction numbers coming out of the UK, probably a bit too tricky for my liking. And this is dollar CAD heading to the downside. Now that NAFTA's out of the way, I had this order set up yesterday, and I'm even more comfortable to get short dollar CAD on rallies, especially with oil hitting 75 bucks. This is out of control. At some stage, that's going to come back and bite the market somewhere. All right, guys, that's it for me. Have a good trade day. As I said, this is not the real. I mean, the market has started. You can feel free to jump in. But don't forget, this is going to heat up as we start to go through the week. With as you scroll down, if you scroll down through the upcoming events, you can see the US obviously non-farm payrolls is the major event for the week. All right, so plenty of trading to come. You know, markets are pretty steady at the moment. Just hold your horses and wait for the good opportunities. And that's where we're going from here. All right, guys, catch you later on. See you in the live trade zone. Cheerio.